100 Days Collective.
This is Take Two.
Hello. How are you all doing? A little bit of a different start to the episode than usual, but as you can tell, in the title of this episode, my guests are Nicole and AnneMarie from MyWallSt, which is a stock investing app. Now, why is it that I'm here? The reason that I'm here is because I just want to give a little bit of a disclaimer that in no way am I partnered or affiliated with MyWallSt. I just took the opportunity to have an educational discussion about money. In saying that, enjoy the conversation. Alrighty, Roo. So, girls, AnneMarie and Nicole from MyWallSt, thank you so much for joining me.
Thank you for having us on.
So, let's start out a little bit. So, Nicole, you would have reached out to me and you were like, Deb, let's talk a little bit about money and investing.
Yeah.
How did you get started into like all of this, into this space?
Yeah, so I actually only started investing when I started working at MyWallSt. So when you start, they give us some money to get, obviously started. And before that, I did kind of think that like investing was only for rich people. I had been like a financial writer before, but for like things like mortgages and things like that. So my knowledge about the stock market was limited. But yeah, I definitely thought it was only for like wealthy people. You needed a lot of money to start. So joining MyWallSt was kind of great because you get all the free content. You're constantly writing about it, learning about it. And I was like, okay, this is something I definitely have to do. When I saw like my, our colleagues' stock returns, who'd been investing a bit longer than us, I was like, yes, I definitely have to start as soon as possible.
Yeah, I think just the concept of stocks or like the investing industry in general is really intimidating, especially for beginners. Like, I'm going to use myself as an example. So I'm really, really bad with numbers, very bad, completely. So so it's not just that I'm like intimidated by numbers, but sometimes I think I might degrade myself in just like even how I talk about myself when it comes to numbers. I'm just like, oh no, I can't do that. Also, it looks really risky.
Yeah.
And it's almost like gambling at the end of this. Like, it's not it. But I think with the likes of social media, a lot of people are glorifying it in such a way where it kind of is gambling, unfortunately. What about you, AnneMarie? How did you get started in investing in general?
I guess like my knowledge of investing started out a bit younger, but I think the only reason for that is I grew up in the US, and I think investing is just like a larger part of your kind of everyday narrative. I think like there's kind of the understanding that in order to sustainably retire in the United States, you have to be investing because our kind of social infrastructure isn't really set up to like allow you to be able to retire simply on your social security. And so that meant that my dad is an accountant, so he was kind of always on the inside and thinking about stuff like that. So kind of from the time I was a teenager, I was aware that he was investing, and it was something that he kind of kept an eye on once a month or something like that, and he was kind of checking in with. And really, like, I had money that was just sitting in a savings account, not really doing anything, while I was in high school. And I just ended up going to him and being like, here, will you take some of this and just put it into something? Because like, you really don't make any money in a savings account. There's practically no interest in them. And so, yeah, he just kind of took it from me and just put it into some index funds, like really easy stuff that you don't really have to think about. And that was kind of my intro to it. And then like, I didn't really seriously consider investing in individual companies or, thinking about like, developing an investment thesis or any of the stuff that we do now, really until I started working at MyWallSt. And I think that was just MyWallSt, like, because it's our job, we're granted so much time to think about it and do so much research and due diligence because like we're pitching, information to other people. And so like, I spend 40 hours a week doing it now. So it just seems all the more kind of reasonable and like safe and less risky because I like have had to sit down and read about it all the time.
I see. So is your life basically just looking at numbers going up and down?
Not really. I actually don't really look at so much of the quantitative stuff. So we do like long-term investing. So we're picking companies that like you would hold on to for like 30 or 40 years. So I do some financial modeling, but it's kind of like just one of the steps I do along the way. Like I'm far more interested in like the story of the company, how it was founded, like who's on the management team, like like what type of market are they interested in pursuing. Our like founding CEO is a guy named Emmett Savage, and he's like quite a famous investor. He's done really well over the last kind of 20 years. And he always says that companies are stories. So
Yeah.
it's a lot less about like just focusing on their quarterly reports and like how much revenue they're bringing in, and far more, you know, seeing what the CEO's long-term plan is and how they envision their company growing over the next 30 years, which I am fortunate about, because I think if I held my position in really any other investment company, I would, just look at numbers all the time, day in and day out, and run models. And it's not the most glamorous part of the job.
And how does investing based on a company's story help? Is it just because it is a long-term thing where the chances of you liking this person or liking this company, it will work out in 30 years, sort of?
I think it just makes it a bit more accessible, really. Like the benefit of long-term investing is it truthfully, like from a statistical analysis point of view, is like the only way that an individual investor could potentially beat the market. So like that's what MyWallSt was kind of set up to do. So you can invest in an index fund, which means that you're investing in the entirety of the market. So for example, the S&P 500 is the 500 largest companies in the United States. And you can just put money in that, and it does like pretty well every year. And that's kind of like the way you can invest on autopilot and not have to think about it. But like MyWallSt's whole point is, hey, if you sit down and spend a couple hours every month and think about companies that you love and interact with and build your own little portfolios of stocks, there's the potential that you could actually beat the market and make even more money over a long term. And we have seen that like if you hold a diversified portfolio for, I think it's like 20 years, if you've diversified enough, the likelihood of you losing money is literally zero. And so I think like our point of focusing on story and focusing on the people involved and trying to make companies understandable to people is hoping to unlock that potential for them. I also think like people are far more likely to be interested in investing when they get to invest in companies that they interact with and love. So like if you really love Nike clothing and you invest in Nike, it means that you're likely to hold the stock through downturn and stuff like that. I don't know. I think it's kind of like personalizes it a bit for people. It takes it out of that kind of like strict financial world.
It adds a little bit more of a value to it, I guess, rather than just a number, eh?
Yeah, definitely.
And who would be like your favorite companies so far, or who does MyWallSt like to push currently?
Well, so the shortlist I think currently has I think we have 110 stocks on the shortlist currently, which we add one new one every month. So like it's constantly being updated with new companies. So there's too many for me to list all of them. But my personal favorite company that I talk about all the time to the point that it is annoying is, Nicole, what company is that?
Costco.
It's Costco. I love Costco. So Costco's it's like a grocery store in the United States, basically. But it's huge. Like it's called a warehouse store. And they build these massive warehouses all over the US, and they are a wholesaler, which means that they sell products at cost. So there's no markup on them, so people save money. The one caveat is you pay $50 a year to like be allowed to shop there. And Costco does really well. My parents shop there all the time. It's like they're a great store. But the reason I love Costco so much is for like the last 25 years, they have been commended as being like one of the number one places in the United States to work, which is shocking because like traditionally working in a grocery store is like a really thankless job, and people tend to be underpaid and they don't get any benefits. But in Costco, like they are traditionally some of the best paid workers in the retail segment, and then they get like comprehensive medical insurance, they get retirement plans, all of these great perks, and it's something like the average Costco employee will stay working there for 9 years, which in retail is unheard of. And so I really like Costco because it makes me feel good about investing, because I'm like, I get to put money in a company that like I have shopped there numerous times, but then also I'm like supporting a company that is benefiting your community and is like very beneficial to the people that get to work there. So you just feel good about it, particularly in like these times when you were hearing so much about people aren't making enough money and there's a push towards unionization and there's so much wage frustration right now. So yeah, that's kind of my
and
favorite
who's that
stock.
for Europe now?
What's my favorite?
Yeah, your favorite one for Europe that's similar to Costco but is Europe. In terms of values, not model. Does that make sense? Nicole, chime in as well. You know what I mean?
Like,
I think I don't know. Is there
To
like
be fair,
a company
Costco
like
is
that?
in the UK.
Oh,
Um, let me think,
Costco
let
is
me
in
think,
the
let me think.
UK, but like,
They are. I think they might be in
Well-
Spain too.
I've never been in one, but I really want to go to one because AnneMarie talks about it so
Okay.
much.
They're so good.
no,
Yeah.
it sounds as in. I think it's just in general when it comes to the job market right now. Obviously, talent moves around as often as possible, but usually the most common reason is shitty management. Let's put it that way. So, knowing that there is a company out there with such billions, probably, if not more, Anne-Marie, you can correct me on that, that actually is treating their staff well. Like, good on them. Take my money, yes, gladly. You know,
Yeah,
Yeah.
it's one of the few. It's
50
doing good.
euros a year just to go in. Yeah,
Yeah.
one of the few, exactly. Okay, so that I'm trying to think of like other. Obviously, Elon Musk gets shat on all the time, but praised all the time as well. So,
Yeah.
yeah, I don't
We
know
have
what
a
the fuck's.
feud with Elon Musk.
Do you?
We don't like him. Well, I
You
don't
don't
like
like
him
him.
personally. I think our company. I don't like Elon
You don't
Musk.
know. You don't like him.
And
yeah.
Nicole has to not like him because Anne Marie doesn't like him.
I am kind of indifferent to him.
Why do you not like him?
I just think he's like a huge hypocrite. Like, I think he's a huge hypocrite because he went on this big tangent about free speech when he's in the process of trying to buy Twitter. That hasn't gone through yet. That could fall through. I really could see that falling through, to be honest. But his whole crusade was, I want to promote free speech on the platform. But Elon Musk has repeatedly fired employees from Tesla who have leaked like documentation to the public about like safety concerns in the cars. So like you cannot say, oh, I'm pro free speech and then deny your employees that right. I think that's ridiculous.
Yeah. I had a friend of mine that actually gave me this like rule of thumb when it comes to whether or not she likes business people or business public figures anyways. And it's I will judge them based on how the company or they treat their lowest level employee,
Yeah,
you know?
I've heard that. Yeah,
I think Elon Musk as a brand is not great, but like what you call it, obviously the science that he's bringing to the world is like interesting, you know. But I like that he doesn't mind shitting on like people from the United Nations about like transparency with their money. Like, fair play to you, you know. Unfortunately, it has to be a big voice like that to get a response. But then if you're firing your lowest level employees because they're talking shit as well, like you know,
yeah.
it's
Yeah,
kind of like he chooses his battles, but the battles need to be chosen properly all the time, you know?
Yeah.
So, yeah. Okay. So we don't like Elon Musk over here, or we're indifferent to him. Honestly, the world is going to shit. We've got a billionaire trying to purchase a platform that like no one really cares about.
yeah.
A living crisis, a housing crisis, recession. Let's
war,
talk about the
yeah.
recession. What the fuck is happening, girls? Yeah.
Yeah.
Like, is a recession coming? Like,
I think we're
it's
basically
coming.
in one.
It's
kind
gonna
of.
happen.
Aren't we, Anne-Marie? I think we're
Yeah.
technically in one.
We just have to wait to see how bad it's gonna get.
Yeah.
We're actually not technically in a recession right now. We are in a bear market for the stock market, which means
What does a
that
bear market mean?
So there's a bear market and a bull market. So when the market is bullish, it means it's going up. And when the market is bearish, it means it's going down. And we officially declare a bear market when the market has dropped more than 20%. And this year we have dropped more than 20%. So we're officially in a bear market, which people tend to be like, that is a signal we're heading into recession. But we are technically not in recession currently. We are still in inflation, quite extreme inflation at the minute. And that will probably continue for a while because inflation is being caused by actually two factors. So like the most basic definition of inflation is that there's too much demand and not enough supply. And traditionally, when we've seen inflation in the past, it's because there is an excess of capital, like money floating around the economy. And we have that currently for two reasons. The first is that people saved a lot of money during the pandemic if they were in the upper classes. Lower class people really struggled during the pandemic, often because they were working in industries where they were laid off. But like people who work from home and make six figures just continued to make money, but then just didn't have anywhere to spend it. Like they couldn't go on vacation and they couldn't, go to the movie theater every week or whatever. So they now are hoarding a bunch of money, and they are now doing something that economists are calling what are they calling it? It's like revenge spending. That's what they call it. Where I'm sure if you talk to anyone who's currently working in like the Irish hospitality sector, they will tell you there are thousands of Americans flocking to Ireland right now and spending ridiculous amounts of money to rent cars and stay in hotels. And they can do that because they have an excess of cash. So we have all these rich people pumping money into the economy. And then on top of that, businesses have an excess of cash because lending rates are really, really low. They're at practically 0%, which the reason that happened was in 2020 when the pandemic hit. In order to stimulate the economy, the Federal Reserve in the United States lowered interest rates to practically zero because they wanted to allow money to continuously flow into the economy because they were worried that there would be a recession caused by lockdowns.
Mhm.
So now we have all this excess money floating around. And then on top of that, we don't have enough supply for a bunch of reasons. Like housing, we don't have enough supply because we haven't been building enough houses. But then also like regular stuff is under a tremendous amount of strain because we have supply chain issues, which are happening because there are lockdowns in China. So it means that the ships cannot come into port to fill up on all the goods that need to go to the United States or the EU or wherever they're going. And then on top of that, we have the invasion of Ukraine. And Ukraine is so important for so many industries. So obviously oil and natural gas, a tremendous amount of that in the world is controlled by Russia. And there's now an embargo against Russia. So probably in the winter, we're going to be struggling with that. And then Russia and Ukraine control 30% of the world's grain. And the time for planting grain is in the early summer. And they've practically missed that window now. So we will probably have a run on grain coming into the winter. So that will cause prices to go up because there's not enough supply. So we're in inflation at the minute, and people think that the solution to inflation is recession, which is technically correct, but I guess like the solution to inflation is no, like less inflation. But in the past, to get out of inflation, governments purposely trigger recessions. So it is possible that we will slump into a recession in the coming year.
But
What would be a government trigger? Yeah, okay, there's more.
No,
Jesus fucking Christ.
no, I just
Okay,
wanted
sorry,
to add
Nicole.
there, but that was really negative, but it's true. But on a positive note, if you are a long-term investor,
I see.
now is actually the best time to invest because the markets are down, so you can buy
Yeah,
shares that are
that is
usually
100%
more
correct.
expensive. But now they're at discount basically. So think of like now, if like everything else is kind of fucked, but if you're an investor and you're thinking of the long-term mindset, now you're like, oh, well, if I have 200 euros this month to invest, I can actually buy more shares than I could in 2020 when all the stocks were going high. So there's one benefit from us being in a bear market and there potentially being a recession, only really for your portfolio.
Yeah.
Now, in all honesty, are the lowest that they have been now? Will they get lower, do you think?
We
It's
like have
impossible
no
to
way
know.
to call the bottom. Like it's it's not possible to know. Like too many factors impact the stock market. I would argue almost the most important factor of the stock market is just like general fear. There's like a fear index that people maintain, and it's like trying to measure how much faith people have in the stock market, and it's very low at the minute. And that's because like we're actually not in recession, but people are so worried that we might go into a recession that they have begun pulling their money out of the stock market. Because if you're worried, oh my gosh, my assets might lose 50% of their value, and what happens if I get laid off and I might need that money? So they're pulling it out so they can hold it in cash, which is a security tactic, and that's fair enough. Ideally, you would be investing in such a way though that you wouldn't need the money for like 20 years. You could leave it in and it could just fluctuate with the market and it will eventually come back up. So yeah, we can't call the bottom of the market. Like no one can do that. It's like statistically impossible. But we are down significantly. Like some of the like our favorite companies, like some of our biggest names, they're down like 70% from an all-time high, which is a phenomenal discount. And a lot of them are now quite undervalued. So it is a great time to invest. It's also a great time because this is the time when great companies really stand out and establish themselves as being great, whereas companies that have kind of been taking advantage of excitement in the market might like wither away because they can't survive the economic conditions.
Yeah.
I see. And when it comes to, what was I going to say? Oh, yeah. But also, like, money is there to be spent as well.
Yeah.
So, like, I'm assuming the people that took money out, obviously, at a point in time, they have to take it out, or else you're just going to die with money in your bank account, right?
Yeah, that's true.
So it's like practical usage too, where it's like, save your money for a rainy day. You okay there, mate? Save your money for a rainy day, like this is the rainy day, kind of. But also, if you are saving up for a car, considering the petrol prices right now, you're better off putting it in like investing it, if I'm understanding you correctly.
Yeah, like
Yeah, so we tend
Sorry.
to tell people to pick out like a long-term goal. So something that has at least probably like a 5-year horizon. So for a lot of people I know that who've spoken to us who've used MyWallSt, it's like a down payment for a mortgage, or it's like their kids' college fund, or it's like retirement. So it's good to like have an investment goal in mind rather than it just being kind of a knee-jerk reaction to a macroeconomic condition.
I see. Okay. All right, that's a lot. Let's park
Sorry,
that for a bit.
I'm
No,
so
as
sorry.
if
Like
no, no,
inflation
no,
ends
no,
up like really
no,
complicated.
no. You didn't complicate it. You explained it perfectly well. It's more just sometimes there's like a little bit of, it's the honest truth, eh?
Yeah.
And
Yeah.
right now, like that's what it is, and you just have to figure out how you're gonna adapt to it. And as you said, like don't react extremely. No knee jerk
Yeah.
reactions, because that's gonna screw you over in the big time.
Mhm.
Same with investing in really weird ass coins and cryptos. Fucking
Yeah.
weird.
Yeah.
Stop doing that.
Yeah.
Dumbasses.
Yeah.
Um,
Crypto market is really
just
bad
I have like, oh yeah,
at the
and
moment.
that's what I want to transition into, because like right now, I don't think it's with investors per se, but you can correct me on it. But when it comes to crypto, it's as if crypto is the solution to poverty. When and that's like how a lot of influencers are like living their lives. It's like, oh, like buy my course,
Yeah.
learn how to invest in crypto, and then like you can live wherever the fuck for 300 euros in Bali, which is like okay, you have a nice villa, but like there's more to that. And obviously right now, I don't know how bad crypto was last week, but it was like a shit show.
Yeah, it was really
But
bad.
I think it just uncovered the it's not even fraud, but like there's a few coins that are just like weird and they have no sense, in my
Yeah.
opinion. Anyways, I can say that. um Nicole, when it comes to creating content, like investing content, right,
Mhm.
considering that it is quite a male dominated space, what was your experience like doing that? Have you faced any backlash
Yeah, actually, I have, and
or critique?
yeah, for sure. So I create content mainly on TikTok. That's been like our best platform where we've seen the most engagement from. So that was great. But also, a young woman talking about stocks is quite rare, anywhere. And especially maybe a young Irish woman. I think I might be the only one on TikTok talking about that. And yeah, I have had a little bit of backlash. I've had like, comments from, I'm not being like biased, but they are always men. Like they're always men. Every comment, every negative comment I've got about like say my appearance, or like just saying like things, trying to contradict me, trying to make what I said wrong and things like that. So that wasn't nice to see. But to be honest, it happens only like one time every like 99 comments are nice, one comment is bad. But that's gonna happen, and I see it with other like creators on TikTok. I think TikTok is actually apparently the worst for troll comments and on any social media platform. So you kind of have to have a bit of a thick skin about it. But in general, the feedback we've gotten from women has been great on social media, and I think that's what kind of encouraged me and AnneMarie then to start the FML Fund My Life podcast, because there's not enough resources for women out there about investing. So, and yeah, the feedback we've got from, I think we've only started FML about 2 months ago, really. And yeah, we've gotten really good feedback from Irish women and women in general saying like that, oh, they're really happy that there's this kind of content for them. And yeah, we're trying to make it fun and approachable and just basically make investing seem easy as possible.
When it comes to women in the investing space or in the industry, what is that like right now? What does it look like?
Yeah, there's still a lack of representation for women. I mean, we recently interviewed someone from ARK Invest, which is one of the most famous investment companies in the world, and she still says that, like, she's their chief strategy officer, and she says that she's regularly the only woman, in a boardroom filled with men. And yeah, like there's just basically a lack of representation. It's still considered a boys' club investing, and maybe that goes maybe because of films like The Wolf of Wall Street and things like that as well. But it always has been, and it still is. But more women than ever are investing in the stock market and taking control of their finances. More than ever, and I think that's also because more women are not getting married. More women are staying in their careers for longer now. There's loads of reasons, like more women are, buying a house on their own than ever before. So then they're like, okay, well, I have to take control of my finances. Investing is the best way to build wealth individually. So it is getting better, but there is still a massive gap, and it's very obvious sometimes.
Is there a reason why before, like, it became a big boys club, or was it
Mm.
just like the way the world worked when it was like women had less control over their finances than men and were bringing less money than men?
Yeah.
I I
What
would
do
say
you?
it's probably a hangover from like a lack of
Mm,
female employment, like women entering like a number of fields, and even just like the workforce in general is relatively new. I often hear like women in the United States talk about in the 1970s, like it wasn't possible for a woman to have a credit card like without a man co-signing on the application, which is like just ridiculous. So I think it's like it's just a hangover. Like it's stuff like change like this takes time. I think people have this tendency to say, "Oh, we're living in a post-feminist society. We're like, oh, we've achieved equality. Things are over." Like, like a woman can work in any industry. It's great. And I always think that's so ridiculous because change is so generational. It will take probably 2 or 3 more generations after us before women will achieve true equality, and that's like just maybe looking at the United States and maybe not considering any other country. Things are going to happen so differently. And I think like one of the factors we have seen repeatedly in terms of the wealth gap, which is important to distinguish the wealth gap from the earning gap. So we tend to hear the wage gap quite consistently. I think now it's like 77 cents to every dollar that a man makes, a woman takes home. But basically, because of then them making less money, and then a number of other factors like the tendency that women are expected to stay home with children, so they will temporarily exit the workforce, or that they tend to be working in fields that are paid less because they're often pushed out of other fields. It basically means that wage gap is made dramatically worse over time. Also, then by like women maybe not feeling comfortable enough to invest on their own or approach a financial planner. So the wealth gap between men and women is actually 40%. So when women enter retirement, they tend to have 40% less money than men, which is really significant. That's a tremendous amount of money.
Mm.
Um, and so the only way we can actually fix that is we can't go to women who are already in retirement. It's too late, because investing is this like really long-term journey. So like the only thing we can do now is go to women who are like in their 20s and 30s who are entering the workforce, who might be getting like their first proper job where they're comfortable enough to be putting money consistently into savings. And we have to go to them and say, hey, if you don't begin investing now, you could end up 40% poorer upon your retirement. And
Mhm.
that's such a bummer because we have seen in a bunch of studies that have been conducted recently by big financial firms, women are better investors than men. They're
Yeah.
more level-headed, they're better at like recognizing risk, they're better at leaving their money in place. Like when inflation happens, when recession happens, when the market is down, when we're in a bear market, women just leave their money there. They don't take it out. Men tend to take their money out. And there was one
Mhm.
study that showed that on average women are outperforming men by about 2% a year. And I know 2% sounds like nothing, but if they were to maintain that 2% advantage over 30 years, the average woman would end up with a portfolio worth 25% more than the average man. So it's just like these little consistent changes make dramatic changes over long periods of time. And so I think that's what we're really interested in
Mhm.
kind of spreading the word about.
Yeah.
Go women.
Yeah, and
Yeah.
women also make better long-term investors as well, because I think they're more prone to being able to think, okay, I'm going to invest for my children's education, or they're able to see maybe really clearly their retirement, so they can really think kind of far out because we're used to thinking like that, like naturally. So I think that's a really interesting point. And yeah, like even though women are like we're said to be the more emotional ones, but actually men invest more on their emotion. So when they're
Yeah.
more likely to panic sell, maybe put too much more money into something before properly researching it. Whereas we don't. We actually just sit back and think, think about the risk, and then think about the long-term mindset. All those components make you a great long-term investor. So I think that's really interesting about the emotional part, because we always get labeled as more emotional, but not in investing.
Yeah, like there's a reason that like 90% of NFTs are owned by men. Like no reasonable woman is sitting there being like, I'm gonna go buy an electronic monkey. I think that's a good idea. Like,
Oh,
yeah,
they're so expensive. It's a fucking
ridiculous.
joke. Like
Yeah.
I appreciate Web3. I appreciate the metaverse. Like I am all for learning, but don't come fucking telling me that all these Mona Lisas are costing $1 million, if not more.
Yeah.
And there's like 100. And then after the Bored Ape Yacht Club comes the Bored Bunny Yacht Club. And those are also selling too.
It's crazy.
But
It's wild.
oh, I appreciate, again, like I understand the concept of artwork and all that, but like fuck me, how many communities do you want to get into for a free t-shirt? Like you know,
Yeah.
as in you have to revisit your model, man. Like, again, fair play, I'd love that money, you know, like
Yeah.
but anyways, that's NFTs and monkeys. What was I going to say about we were talking about some I always have to shit on something. When it comes to women, you were talking about like how women are better investors and all that. But you mentioned something about putting money aside and ideally investing on a monthly basis.
Yeah.
Now I know that like your professional response is invest as much as you could afford. Like I'm sure that that's what you guys say all the time. But ideally, if you want to avoid poverty when you're older, 40% to be specific, how much should you be investing a month? AnneMarie.
Yeah.
Oh, okay.
on you.
Okay. It really is going to like I can't give you a number. I can't be like 250 euro a month, like it, because it's going to be entirely dependent upon your income. I would say kind of like step one before you invest, which is something that me and Nicole have to talk about all the time, is you need to have 6 months of emergency funds and savings, like in a savings account that you can easily access. So like step one, no, don't invest. First off, we calm down and we put 6 months of emergency money into savings.
And how much should emergency money be?
You
Ideally.
have to like do it yourself. So you need to sit down and you need to look at a month. You have to like you have to do like an Excel spreadsheet with yourself, which I know is a big ick. And you need to go, okay, my rent is this. This is how much I spend on food. This is like what I'm spending on, I don't know, healthcare. And you like if you have pets, you need to put down like your pet spending, and then you need to give yourself a little emergency cushion in case, I don't know, you end up in the hospital, your dog gets sick, something like that. And then you have to multiply it by 6. And then you probably need to add like 10% more because people are really bad at estimating how much money they spend. And then you have to put that into a savings account. Hopefully that has a somewhat decent interest rate, but in Ireland those are really hard to find. So just look for an interest rate that's above 0.01% because that one's pretty bad. And then once you have that done, then you can start looking into investing. And it really is just going to be, again, you have to budget and you have to be like, how much money do I have left over at the end of the month? And then probably a little bit of it should then go into savings once you have your emergency fund. And then the rest you can say, okay, I'm going to invest this amount. If you want like actual numbers of how much money you'll end up with at the end, we have a compound calculator at MyWallSt, and it allows you to put in, okay, if I invest $20 a week and this is the average market return, and I invest for 30 years, how much money am I going to come out with at the end? And it is shocking how much money you'll make.
Yeah.
Just with like an average market return of like 9 and 10%.
With MyWallSt, is it the kind of app or kind of business where you throw in 20 and then it goes where it goes as long as it gives me money back? So is it kind of like a what's the word? Is it stockbroker?
Like,
does it kind of like
do
that,
it
or
for
do you
you?
choose where your money goes?
You choose.
Yeah, does it do it for you? That's basically it.
No. You
choose.
choose. So you'll
All
set
right.
up your own brokerage account, and then what MyWallSt provides is, like as AnneMarie mentioned before, like a short list of stocks, and these are picked by the analyst team, but also constantly updated. So if anything like changes in the business, the analyst will let you know, and they'll update their comments on the stock, which is really like handy and will save you countless hours of time and research. And then you'll also be given like daily stock news and podcasts to help you get started, keep you updated on the market, all these different things. And then stock of the month picks, which is like, if you invest in this company right now, this is like one we're really backing at the moment. And then, as AnneMarie also said, we add a new stock to the portfolio every month as well, just to ensure that like everyone has kind of what they're interested. There's a stock basically to cover anything that you're interested in, and we always are finding new great companies and then also keeping them updated. But that's the kind of value that MyWallSt brings.
Exactly. Like, it's obviously a little bit more hands-on than just throwing money at someone and being like, you do you. Just give me my money back, kind of, for a percentage.
Yeah, and like
I
those
see.
fund managers, like that would be more of like a fund manager, and like they're so expensive to work with. So like this is kind of cool because you're getting like, you're basically getting a kind of like fund manager advice, but for such a small fee. Like that's the kind of thing, that's kind of our mission, is to get the world investing successfully and make it accessible. And that what investing isn't just for rich people anymore that can afford fund managers. It's for everyone.
Yeah, and you kind of get educated on it. I think I'm all for like learning whatever like it may be, and obviously ideally where your money's going. Obviously that means full ownership of, if you fucked up, that's on you. You know what I mean?
Yeah.
But it definitely helps, eh?
Yeah, I think it really helps us like reduce panic, because I think the way it traditionally used to work, it would be you would find like a mutual fund manager and you would just give him your money and you would be like, okay, I'll check back in a year. But it's quite faceless. Like, you don't know what that man is doing with your money. And also he's trying to maximize like the money coming in, because he gets a massive bonus off of like whatever he makes. Whereas I think, you get much better ownership over your investments when you have selected the company yourself. And it does mean that people are better than at holding through market downturns, because they're like, no, it's okay. Like, for example, like I owned stock in Costco. I have like the market, like Costco could drop 50%. And I'd be like, it's fine, because like my parents are at Costco every week. So like someone is spending money at Costco, namely my parents, but like I have full faith that stock will be fine. You know what I mean? So it does just make you feel better, and you kind of go into somewhat of an autopilot, where like the first 6 months that you invest and you have to pick out your own stocks, you will genuinely check them every 15 minutes and you'll be so frightened every day. And then it will kind of wear off, because you will find faith in yourself and you'll be like, no, I did my due diligence. I did the research. I'm familiar with this company. I've read up on them. I've read analyst reports about the company. I feel good. And you kind of get a little bit of confidence. It's nice. Like, you get a feeling of ownership over your financial decision making that you don't get if you're going through a fund manager.
I see. Okay.
Yeah.
There you go. Fair play to you guys for selling it.
Thanks.
If I ever monetize this podcast, I'll go to you and you write the script.
Our marketing team is somewhere being like, give the actual website.
Read the website first.
Yeah.
Terms and conditions do apply.
We offer a free trial. Free trial, so you can try everything.
Yeah. Oh, there you go.
Yeah.
Okay, so is it like a subscription thing?
Yeah, it's a subscription
every month
service.
After the free trial?
Yeah, it's a subscription service.
Okay.
So but you
How
get
much?
like 7 days free trial. It actually works out a lot better if you it's like under $100 a year, isn't it, AnneMarie? That's right.
Yeah, it is. Yeah.
Yeah.
That's fine.
It's more expensive if you just exactly. Think of it like the cheapest fund manager you'll ever have.
Easy access to AnneMarie and Nicole.
Yeah.
And loads of other people.
You can just get chatting to them.
Yeah.
And loads of other people.
And loads of like much more experienced like analysts. Like our CEO Emmett has like been investing for like 20 years. He is very impressive. So you can listen to all of his little nuggets of advice as well.
I always find this interesting. I read no, I did not read anything. I came across like TikTok or something.
Yeah,
and
there we go.
Shite. But it was basically about like brands and their CEOs, and it's like usually like the most successful companies are the ones where the CEO have their own like reputation, and the company is also like really good. And then it's just like a really nice thing. And the way you talk about your CEO or the founder is just like, oh, makes sense why the company is succeeding.
Yeah.
How many employees are working at MyWallSt right now?
Only like 26, 25, 26.
Oh, it's
Yeah.
small.
Yeah, it's
Small-ish.
Yeah, we're
small,
pretty
and
small, yeah.
Yeah.
it's an Irish startup. But yeah, we've been on like big publications. So for a small company, like we've done a lot. But yeah, like most of the people, like it doesn't take that many people to manage it. I guess the analysts, they do their stocks, and then like we have writers, and then we just have like, an engineering team to keep the app kind of going in the background. So yeah, like we have a lot of
Okay.
users, but it doesn't take a massive team. So that's cool.
It's amazing. Good on you.
Yeah.
Go.
Thanks.
Good on Ireland. All right. So we were talking about women investing, all that sort of thing, and you kind of went back to the basics. Now, when you also mentioned right now with the current crisis that we're at, you briefly touched on the fact that now is actually a better time to be investing.
Yeah.
Mhm.
What would be like a little bit more in-depth advice when it comes to investing during a recession?
Mm.
Like, are there any red flags that people should look out for, that people should know about? Is there something that is a green flag, for example, or a good sign?
Um, I think something that I've been looking at recently, in terms of when like picking individual companies or looking at individual stocks. So just a little bit of background info. When you're a publicly listed company, you have to release a quarterly report, which is kind of like a financial wellness check you put out for a year. They're really beneficial for us, like as analysts and investors, because it's complete transparency from the company. So you can check in with like, I don't know, what new products they're developing or what their management team is up to and how much money they're making and how profitable they are and stuff like that. And in this last quarter, we've seen a number, particularly of tech companies in a lot of various spaces, particularly like the crypto market, even like the finance end of things. Tesla, like they're laying employees off.
Coinbase, right?
Yeah, Coinbase laid off like 25% of their people. It was crazy.
Crazy.
Um, and so a green flag for me right now has been listening to management teams discuss whether or not they're going to lay people off. Because
Mm.
if a company is laying off employees, what that tells me is that they got overexcited and they hired too many people. And that is exactly what happened to Coinbase. So Coinbase made a whole bunch of money in like 2020 and 2021 because people were sitting in their homes with nothing to do and they had money in their bank accounts and they said, I want to make more money and I have time to think about this right now. So it meant that they poured money into cryptocurrency and NFTs and all these ridiculous things. And now that is beginning to reverse, right? Where people are taking their money out because they're worried, which is fair enough. But Coinbase did really well in those, several quarters where people were pouring money into cryptocurrency because that's what Coinbase does. And obviously, they hired too many people. Like they took on too many people because they thought this growth that we're experiencing, we're going to maintain this. It's going to be like this forever. The US dollar is going away and we're all going to be on Bitcoin, right? Which did not happen. And so now they're laying off 25% of their staff, which is really unfortunate. Like that's impacting like people's livelihoods. But it tells me that the management team didn't do a good job in creating a long-term plan that was sustainable for the business, right? They just like reacted to trends. And you don't want a business that's reactionary. You want a business that's really considerate, that's thinking, right, how many people do we need for the next 5 years, the next 10 years? And so a really great green flag I've seen recently is hearing management teams talk about saying, oh no, we're not going to be laying anybody off. We're totally fine. If we go into a recession, we're like in a position to maintain all of our staff. And moving forward, we will be continuing to hire, but maybe at a slower pace. That to me sounds really great. So like a management team that spoke about that recently is for a company called Salesforce. Very boring business. Wow.
Sounds familiar,
super,
though.
super boring. Yeah. But it's a massive company, like tens of thousands of employees. They're a great business in terms of actually gender equality. They have an
But they're
entire.
boring.
They're so boring. God,
What
they
did
like
they do?
they create they create software for businesses, right? But like back end software, so they help with like automating customer service processes or like maintaining like a good overview on like your stock units and stuff like that. Like they're very important for like e-commerce businesses and stuff like that. Very, very, very successful business. Like one of the
Yeah.
earliest kind of software companies that emerged in the 1990s. They are really great in terms of equality and like representation and stuff like that. They have an entire department within the company that all they do is sit every quarter and make sure that the men and women in various departments are being paid the same, because they have found over time statistically that men will just end up being paid more than women because of everyone's like internalized misogyny. So they're a very nice, lovely company. But on their most recent quarterly call, their CEO got on and he was like, oh, no, like we're not going to be laying anybody off, but for the next year, we'll probably just be more conservative with our hires. And to me, I was like, bing, excellent, because that means that they were thinking in the long term, even when they were really excited 2 years ago and they were making a bunch of money. So that is a great green flag for the
That's a good
current
one,
market
yeah.
conditions.
Interesting. Okay. So again, it goes back to probably company transparency.
Yeah, definitely.
Is it hard to find companies that are actually transparent when it comes to their quarterly reports and just telling their story?
It can be like myself and so like our head analyst for the MyWallSt product is a guy named Rory, and he's my boss, and we talk pretty consistently about companies. And like his number one, I would say, green flag is transparency. Like a company should be doing so well that they are going painfully out of their way to give you information. Like when you open a company's quarterly report, they should, like, I can always tell when a company is doing well based upon how nice the graphs look in the quarterly report. Like if a company has like 15 graphs and they all look really nice and they're like very informative and they have nice captions on them and they're explaining everything to you, I'm going, great. This company's doing so well. They're going to backflip to show me how well they're doing. That's
They
a great
hire the
sign.
graphic designer too. Good
There
on
you
them.
go. Yeah. There you go. They have enough money for a graphic designer.
Yeah, that's important.
Yeah. But stuff like that, like companies should be very enthusiastic to tell you, oh, and we have this product coming down the pipeline. We're excited about this. That being said, companies will try and hide stuff from you. We literally saw, I think on Friday, there was a big investigation was completed in the United States looking into Robinhood, that brokerage company. And it turns out they were hiding a whole bunch of stuff from the public that basically the U.S. House, the like House Finance Committee had to go and dig up and basically be like, you didn't disclose any of this to anyone. And that does happen. And we've seen that even with like companies like Peloton recently has been caught up with stuff like that, where they've had issues with their products that they weren't disclosing to the public. So you will have transparency issues like that. And it is going to impact the stock in the company. Truthfully, the only way around that is to have a diversified portfolio. So it's okay if one of your companies has this massive scandal and the stock goes to shit, that's fine because you're holding 15 companies. So it's okay. Like your overall portfolio will be all right. And that is unfortunate, but like that is just the nature of things. Like some people are going to betray your trust and try and hide stuff from you in the name of them making money and like the company not doing too well. So
Yeah, like people will lie. Not
Yeah.
all of them, but like unfortunately,
them.
majority of the time they will. I actually mentioned Robinhood this weekend where I was like, I can't wait for a film to come out over the whole GameStop situation and my Wall Street bets. Because
Yeah.
that's like, it's as if time froze in that moment.
Yeah, it was really crazy.
But yeah, I can only imagine like how many people just like automatically started investing in my Wall Street and app downloads in that moment in time.
Yeah,
We did see a huge surge of users.
it was kind of good because I think they saw us as like providing the opposite information. So like we don't recommend day trading. We don't recommend investing in meme stocks. So like I think investing in general became more popular. But then it was nice because these people that want to just like find good information about investing found us. And I'm sure there were a few people that wanted to download our app just so they can invest in, meme stocks and stuff like that, or find out our opinion on it. But yeah, like I remember, our downloads were really good during the whole like craze. But we were always telling people to be super cautious, like, because this is like not a long-term investment thesis. Like just because a group of people on Reddit are driving a stock really high is not a reason for you to buy shares in the company. And now it's kind of happening again with Revlon. It's that like the company Revlon recently filed for a type of bankruptcy, and Reddit users pushed the stock up knowing that it would cause a short squeeze. So I don't think we're out of the meme stock woods yet.
Oh no, we're not gonna be. I think this is gonna be like a definition of our life. You know what I mean? I think we harped on about like a lot of like money stuff and women stuff. So women, if you're listening to this, don't underestimate yourselves, I guess.
Yeah,
That's probably one
definitely.
of the most important things, because I think very often we ask for a lot of permission when it comes to handling our money, asking for raises. Like we don't think that we're worth X amount.
Mhm.
So probably being a little bit more confident. Do you see that when it comes to, would you have any data insight when it comes to women and trading on your platform and how they act that you can
Um,
disclose?
I wouldn't say we have much data to show how women in our app trade, but we have a lot more men like users. I think like 80% of our users are male, and we're trying to
Oh,
like
wow.
proactively change that. But we've gotten like some great feedback from like female users. Like recently, like one of our users actually paid off her mortgage 30 years early by investing with us. So like things like that is like amazing when we hear stuff like obviously customer testimonials like that we love to hear. But yeah, I'm not really sure about how they like, do you mean like what stocks they invest in and things like that?
Of course, like you can mention stocks they invest in,
Mm,
their return you already like briefly touched on. But
mm.
is it mostly on a monthly basis that they do? And what are you hoping attracts women to come on the app more often?
I was just gonna say, like, I remember reading some studies when we like wrote up, like when me and Nicole came on board at My Wall Street. We the first Women's History Month that we were there, that we were both working
Mm,
there, we like produced a lot of content centered around like female investment. And I remember doing a lot of research into companies that had been set up specifically to target women and try and get them into investing. And the like number one thing that all of these companies ended up seeing was that the most beneficial thing for recruiting other women into investment was like it like wasn't any marketing scheme or anything like that. It was getting like one woman in the door and then asking her to like go and talk to her friends.
yeah.
And that has like genuinely been like in my own personal life, like that has been the most significant thing. Like I started working at My Wall Street, and then I went to like all of my friends who are all around my age who are also working like their like who are kind of in their first, you know, like proper job where you're salaried and you're making enough that you can put a little bit in savings. And I went to them and I was like, here, like, have you guys considered investing?
Mm,
And I think that conversation is really different in Ireland than it is maybe in the US, because I think a lot of people, Irish people, tend to be like, oh, I'm just going to put money in my pension. But I think like when you're young, there is a really significant opportunity to take advantage of compound interest and to be doing a little bit of independent investing on your own.
mhm,
And so it has then meant that like all of my friends have gained this awareness and this interest. And so really, yeah, if you're a woman and you're listening and you're already investing or you're interested in investing, probably the best thing you can do is like go get a group of your friends and start talking about it seriously, and maybe, you know, each of you access different resources and kind of have open conversations about that. And we know that's actually something that some of our users do. There's one woman and she like runs a monthly, her and her friends have like a monthly investing check-in, and they all come around and talk about like what stocks they're interested in or like what stocks they
mm,
like, or you know what they've bought that month, or yeah, kind of how they're feeling in the current market conditions. And I think that's really valuable because then you feel supported on your journey. And I think like My Wall Street is set up to support you, but we're still at the end of the day like strangers whose job it is, and we produce content for this app. But I think having people around you who are on a similar
mhm.
journey, I think definitely helps to ease some of those worries.
I never thought of it that way, but you are right. I think it is community at the end of the day
Mm,
Yeah.
and like helping each other out, you know?
Yeah, definitely.
Nothing that like a marketing scheme can ever like top,
yeah.
rather than just like telling each other like stories and success stories,
Yeah.
failures as well, you know?
Mhm.
Like, I
Yeah.
think you also have to learn from other people's mistakes. So,
Mhm.
ideally, people talking about their mistakes would really help as well.
Yeah, I actually, on a recent episode of myself and AnneMarie's podcast, FML, I was talking about a mistake I made on early on was selling a stock too early. So like I wanted to go on holiday and I sold my Tesla shares, and which is not what, you know, the My Wall Street mindset is, but obviously life gets in the way sometimes, and I just didn't like have the budget for it, or obviously the savings, which we recommend. But that was a learning lesson for me, and then since then I have started my savings, and then I was like, okay, well maybe I can't invest this much in the stock market because I need to build up my savings. And it was a really good lesson because Tesla stock went up the next week and I was like, no, so annoying. And I still haven't built up my Tesla like amount that I have back to the same amount that I did before I sold. So yeah, like, but it's all like a lesson. And like I was only an investor for like 6 months. Do you know what I mean? So like, yeah, we try to like tell stories like that as well, like that, we're not like perfect, but we've learned so much from it being our jobs. And like we want to tell women that, you don't have to be this perfect expert analyst, like trade, like mathematician person to start investing. It's actually just picking some companies that you love and that other analysts are talking well about, and monitoring it and diversifying and just investing the same amount every month, because then you don't even have to really think about it. I think like, trying to time the market
Yeah.
is impossible. Like, so just put in, if you're putting in 200 euros in 2020 when everything was going up, put in the same amount now that everything is going down, because you'll actually be better off. You don't have to think about it.
Yeah, like
Mm-hmm.
little expectations. I think that
Mm-hmm.
expectation management over something that is completely out of your control
Mm-hmm. Yeah.
is probably a healthy approach.
Mm-hmm.
Speaking of like beginners and all that kind of stuff now, like I'm gonna ask you a really like dummy question, but I need to understand it, right? So, like you mentioned Tesla stock. Like how much is one Tesla stock right now? Probably like $700? Okay,
Mm.
so let's say it's at $600. When it comes to like a good piece of advice when it comes to investing, do you go for like 0 point percentages of one stock, for example,
Mm.
or is it better to buy more than one whole stock, if that makes sense, of one company? Okay, 600. Yeah.
Mm.
Okay.
Yeah.
So obviously the like I'm assuming that the return on that investment would be less, correct? Like if
Mm-hmm.
you're going to put 10 euro versus 600? Mm,
Yeah. Yeah.
yeah, okay. Based on that information, would it be better practice technically if you had, say, 30 euros to be put, and there's a company which has like one whole stock, which is like closer to the 30 euro mark
Mm.
or less than 30 euro, to put it into like one whole thing rather than splitting it up? And
Um.
I know that diversifying your
Yeah.
portfolio is a good
Yeah.
thing,
Mhm.
Mm-hmm.
but then in terms of like just money making in general, I'm just asking like for me
Yeah.
to understand as well.
I'd say
It really,
splitting
it
it.
truthfully like doesn't make you want
Splitting it?
to
Uh,
split it.
well,
Yeah.
split it between three different companies,
Really?
because, well, yeah, if you have like 30
Yeah.
euros, yeah, because then there's more
Oh.
chance. Like like two might do really well, one might not do as well. But imagine if you put 30 euro into the one that doesn't do that well. That's the way I would see it.
Mhm.
Mm.
You also kind of need to think about it as well in terms of like your broader portfolio. So like if this is the
Mm.
first 30 euro that you're ever going to invest, like Nicole is dead right. Like
Yeah.
split it up, put it into like big, like solid, consistent companies. And because it's kind of like building an investment portfolio is kind of like building a pyramid. Like you need this really strong and stable foundation, which is like big, slow moving companies, and then you can like put riskier kind of ideas on top of it, but you want to try and insulate yourself from like the market, like going into a bear market, for example, for two
Mm.
years because you're going to be very upset. But a larger company isn't going to feel that as much as a much smaller company. They can be very, very volatile. um so yeah, like Nicole is right, like you should split it up and diversify. The only time I would say, oh, like maybe just put it into one company is if, I don't know, like if your entire portfolio was 1,000 euro and you just happened to have an
Mm.
extra 30 euro and you wanted to put it into something, you could then
Mm.
like put it into a single company. Because in terms of like the percentage of your total portfolio, it's not very
Yeah.
much. So
Yeah.
yeah,
And based on that pyramid, I'm a very visual person, so that
yeah,
like really helped. The
Mm.
company at the top would be the riskiest.
yeah,
Mm.
I see.
yeah.
And then in terms of like value that you're putting in, like that you're investing in, would that be like slightly higher than what you have at the bottom? So like let's say if your pyramid
Mhm.
is spread out with 100 euros at the bottom, then the riskier one would be just 100 euro for one stock or more than one stock per se.
That would be totally dependent upon like how much risk you want your portfolio to
I
have.
see. Okay.
And it kind of like the way you want your investment career to go on is you can take more risk earlier in your investment career. So if you're in your 20s, you can take more risks because you have more time for that like stock to recover. So if you're investing in your 20s, you might have a 30-year horizon. So it's okay. Like you can invest riskier, and then you want to decrease risk as you get older because there's a higher likelihood that you might need to take some of the money out, you know, if you need to retire early or something like that. But you kind of have to sit down and be like, okay, 30% of my portfolio is going into an index fund. 25% is going into big tech stocks. You kind of have to like break it down for yourself. And then probably the part of the pie that's in, you know, quite high risk stocks will decrease as you get older.
Okay. Awesome. I learned a lot today.
Thanks.
Thank you so much.
No
I
problem.
appreciate it. Is there anything that I missed? I think we're all good. My Wall Street is amazing. 7-day free trial.
Yeah.
You know, there's
That's
like
good.
2 tiers to the app as well, right? You can get the CEO's advice for a higher price, correct?
Yeah,
Yeah,
that's
so there's
Horizon.
Horizon, which is like
Horizon.
which
Okay.
is run by Emmett. Like personally, it's you literally get to watch him live trade, so you see absolutely everything that he buys and sells for his own personal investment account. So he's using all his own money. That product is much more expensive because you're like literally watching an expert trader. But the standard MyWallSt is like $100 a year.
Fair enough. There's a reason why it costs 1,000 for sure, eh?
Yeah.
Thank you so much, girls. I appreciate it.
Thank you for having us on.
Thank you for having us.
And thank you everyone for listening.
Number Days Collective.